Let's bring in WBI Fund President and Bear, Matt Schreiber. He certainly thinks that you need to be careful how you invest, but you can still get money and run with the bears while making bullish type returns. Why so bearish?
Well, earnings here for 5 straight quarters have been in a decline, and Q4 is really no better at the moment. With most S&P 500 companies reporting already, earnings for a 5th straight quarter have now been in a decline.
Okay, so it's the E in core. You know, they always talk about China, oil, worries about a recession, and of course earnings. But you say that's the big issue, and yet the market seems to be fairly valued, or maybe even a little pricey. Is that how you perceive it?
Yes, we actually think based on trailing earnings. If you take a look at Barron's last week, a 21 PE multiple on the S&P 500, that's well above average. So to go back to average, an average PE multiple of 15, roughly speaking, you could see a pretty large decline on the markets.
Okay, well, in somewhat contrast to what you're saying, the S&P just hit that 1950 level I was telling you about. We're now just slightly below it here, but looks like the bulls control today. But you, being bearish, say there's still names you can get into right now that will protect you if you want to be that bear who's still investing. Let's put them up on the screen. C.R. Bard, which is a healthcare equipment maker, Brookline Bancorp, that's a nice dividend with Brookline, dividend of 3.5%, and Meridian Bancorp. What do these all have in common that you say will help you?
Rising earnings, rising revenue. So it's a great trend in those particular stocks, and that's what you want to see. If you're investing right now, you want to be cautious, and you want to find those companies that have bucked the trend. Try and find solid earnings, solid revenue, and that's where you want to invest your money right now.
And right now we do have the Dow up 200 points. Again, I'm going to ask for that chart because I do just want to at least see the names here so people can write them down, because there are people who have been very worried about the volatility of the market, but also the concerns that over which we have no control, and that is China, whose stock market fell more than 6% today. But we got good durable goods numbers. It's not the worst picture in the world, at least for the U.S.
Well, you know, it has been a mixed bag in terms of what you've been looking at in terms of economic fundamentals. So GDP, since the recovery, actually has been in a decline, and Q4 was no exception.
Why is that?
We haven't been putting people back to work, and that's really what we need to see is people getting back to work, and the American economy will be humming again.
It's hard to make money, though, in this market, isn't it?
It is. Very hard to make money, but again, try and buy low, sell high, be conservative here, protect your capital. Capital is the best thing to focus on, not return.
Okay, we're going to put all of your picks up on foxbusiness.com, and also Liz Claman, the Facebook page, facebook.com/Liz Claman. Great to see you, Matt.
Great.
Thank you so much.